Thanks for tuning in to India Market Close, and let's pull up the markets for you and show you what the deal is looking like. Well, about 0.4% in the green, so it's actually not turned out to be a bad day, right? Because we started off slightly sluggish with the advanced decline ratio firmly in favor of the decliners, at least on the Nifty. Things seem to have been in favor of the advances, at least at the broader end of the spectrum. But on the Nifty, more importantly, out of the Nifty 50, the heat map will come up on your screen. You'll probably see a bit more green than what you saw at the start of the trading day. Almost even Stevens, maybe a bit more green, but in the morning there were maybe about 12 stocks in the green. So what's leading the charge? Metals. China data leading to a strong surge in metals. Tata Steel, JSW Steel, amongst others, have done really well. Mahindra & Mahindra has bounced back after taking a bit of a stick in the preceding day, simply because most brokerages have come out and said that the incumbents will not get disrupted too much because they are taking the lower ticket cars or lower priced cars and not necessarily competing in the premium category with the likes of Tesla or whoever else comes in. But autos, by and large, Bajaj Auto, Tata Motors, M&M, all have come back very, very well. Also noteworthy is the kind of pullback that we see in the Adani Group to Adani Duo. So Adani Enterprises is now just 0.8% lower. It has started off about 3.5% lower. But amongst the losers, UPL couple of percentage points down, Tata Consumer down about 1.8%. Titan has a bit of a stick in the session today. FMCG by and large, or consumption by and large, at least the larger companies seem to be under a bit of a stick in the session today as well. Hersh, what are you spotting at the broader end?
Well, the recovery not, kicking through in the broader end of the market, Niraj, and that's currently the texture and the flavor. But let me quickly maybe pull up some stocks which are in the news as well as are buzzing in trade today. Let me first pull up something like an Anup Engineering. The stock is up and away, in fact, 15% higher. Merger is what was announced, or rather an acquisition, and that one is buzzing on the back of the acquisition. Vinati Organics on the back of certain duties, additional duties which have been imposed with regard to import of phenol, which Vinati Organics produces, and that is obviously beneficial. It's a 5-year duty which has been imposed. Railtel on the back of orders, no surprises there. Amber Enterprises also up around 1%. Positive note coming in from Jefferies, probably leading to that uptick as one of the many reasons. LIC down 1.5% on the back of news that 17% wage hike which will kick through. LIC has almost 1 lakh plus employees, so that will impact it, but employees haven't increased since 2020. So that's one other positive going forward for LIC. Macrotech, that one in focus as well. Jefferies note very positive on Macrotech, 6.5% higher. They've given it a 5-year target price of 3,000 rupees. 1,071 is where that one is trading at. Paytm has been in focus, continues to be so, 5% higher in trade today. Let's also pull up along with it a couple of other tech stocks, something like a PB Fintech, that one also up around 4.5%, and BHEL. Seen plenty of volatility on this counter, Niraj, 4.5% higher in trade even today, along with the likes of a PB Fintech. Among some of the losers on the mid-cap indices, Coforge down roughly 6.5%. You're also seeing some pressure on Prestige. A bit of a dichotomy here because you have Macrotech on one end, which is going up 6%, and Prestige under pressure down around 3.5%. You also have Astral and HUDCO. HUDCO particularly in focus because of that fundraise, 40,000 crore, but the stock not, or rather investors not cheering that at all, 3.5% lower in trade.
Yep. Well, those are a few stocks to monitor. We'll, of course, mark more stocks as the day goes by. And in fact, in the first segment itself, we'll try and talk about the top ideas from Jefferies as well. But first, let's get in opening thoughts from our guest on the show today. Hemen Kapadia, Senior VP Institutional Equity, KR Choksi Stocks and Securities, with us on the show. Hemen, great having you. Thanks as always for taking the time out. What does the texture tell you today, Hemen? Because we started off sluggish, as was the case with maybe some of the other Asian markets. But we seem to have just staged an intraday recovery, as shallow as it may be.
A very good afternoon to Niraj. Thank you for having me on the show. It's always a pleasure. See, I think last 4 days, the Nifty has tried its best to break the 21,900 level. It's not succeeded. So it's very clear that there is solid support there. Now, looking at the glass half empty, if and when we break 21,900, I think we'll see a 300-point downside in a jiffy. Currently, that's not on the horizon. is in a range between 21,900 and 22,200. You have Reliance staging a comeback, a small comeback. You have the Bank Nifty on the verge of being an upward key reversal today. Simply put, the markets are oversold. The VIX is at 14, below 13 would have been a more confidence-giving measure. But oversold, recovery is on. Will this sustain? Too early to say. It's still too raw. I believe there would be some time and price adjustments before we can announce this at a short-term bottom. But as of now, it's a recovery which I believe will spill over tomorrow also. Beyond that, we'll have to wait and see. We have a protracted holiday curtailed next week, 2 holidays, Niraj. And you have the FOMC meeting day after. So event-driven holidays, expiry next week. So it's all over the place. But as of now, it's a clear bounce, and the bounce will continue till tomorrow, Niraj.
Okay, so if that is the bent that you have in mind, Hemen, and it was interesting because last week it seemed very different, right? Real estate down 8.5%, IT up 1.5%. There just seemed to be that bent towards safety. If this is your assessment of what could happen because of the oversold market, as you said, what are the stocks that you're recommending today?
Okay, firstly, the easier one is Britannia. One can buy Britannia at 4980, stop loss 4930, target 5080. Logic is 13 trading sessions sideways consolidation, has closed above the 55-day exponential moving average on the last trading session. Mechanical indicators on the daily chart have all given crossover buys. So this looks like a very clear bounce. Once again, I'm saying it's a bounce. The second stock is UBL, United Breweries. We've had a 4% long build up on Friday. Currently, I mean, it's the chart is very similar to, I would say, Britannia, but a buy at 1730, stop loss of 1700, and a target of 1790. Oversold, downside limited. You have a long build up coming in. Mechanical indicators turning positive after positive divergence. So both of these similar logic, both buy call. Slightly shorter term point of view.
Okay. Just one question, Hemen, before we move on to Hersh for some specific stocks that Jefferies has highlighted. Today there is a bit of a bounce in media. Is this a dead cat bounce?
Well,
I mean, Z, Network 18, Sun TV, everything is moving up today.
Okay. I think Z was battered beyond belief, Niraj, frankly speaking. So a recovery not surprising. Yes. What could have been anticipated is network. 135 to 82, rock solid support levels, deeply oversold, positive divergences, 5% circuit. I think it was I won't say a screaming buy, but it was a tempting buy. So as of now, once again, they're clawing themselves out of a hole that they've dug themselves into, Niraj. So I'd say recovery, too early to label it a rally, but yeah, I think Network 18 does look promising from amongst these stocks. I think this is the beginning of a decent bounce back on the medium term, Niraj.
Okay. Thanks for that. Let's now go across to Hersh, who is standing by for a gist of what Jefferies' note suggested today, as a result of which some of the stocks are pretty excited as well. Hersh.
Yes, thanks for that, Niraj. Jefferies calls this the list where they believe it's going to be a bunch of multi-baggers, possibly 11 stocks is what they are highlighting as part of their coverage. Let me first start off with Amber Enterprises. From ACs, they're moving to components. That should be a positive. Plus, PLI will drive earnings. They're expecting an earnings CAGR of 36% all the way up to FY30. Target price is roughly 2.9, almost 3 times the current market price. They've kept a target price on this one of 9,740 rupees a share. Also, let me quickly also highlight something like an Ambuja. That one positive on the capex upcycle, doubling of capacity, and that will drive an EBITDA CAGR of 19% to FY29 is what the Jefferies note suggests. 1,250 is their target price on Ambuja. So they're expecting 2x on this one as well. Axis Bank is the third one. Where Axis Bank is concerned, they're expecting 17% loan growth, 18% EPS growth, all the way to FY29. They are giving it a target price of 2,810 rupees a share, which is roughly 2.7 times current market price. Bharti Airtel, Now here what they're suggesting is ARPUs will probably drive free cash flow higher, given that there's capex moderation as well in the pipeline, and therefore they are positive on this one. 2530 is the target price, roughly 2.3 times current market price. Quickly on to JSW Energy. 3 times jump in power capacity, renewables to drive upside is what they continue to believe in, and that focus on renewables will continue, and the migration, or rather the mix in renewables, will continue to go up. Target price 2530 is what they're giving on this one. My apologies, target price 1100 is what they're giving on JSW Energy. My mistake. Quickly moving on, Larsen & Toubro, 15% CAGR growth, of course, with all the infra capex that's coming through, execution ramp up plus re-rating. Very bullish on this one. 7564 is the kind of target price they've given for Larsen & Toubro. Macrotech is the best of the lot, by the way. 3x current market price. The stock is up 7% in trade today, largely on the back of this. Housing cycle to drive a 17.5% CAGR in pre-sales growth is what the note is suggesting. Quickly moving on, something like a Max Health is the other one they're focusing on, doubling of bed capacity and 20% 5-year EBITDA CAGR. They're giving Max Health a target price of 1,925 rupees a piece. Lastly, SBI, or rather last three, SBI is one of those. ROA expansion, earnings growth they're penciling around 18%, same as Axis Bank, but a change in investor perception is what they're highlighting will happen. 1860 is the target price here, roughly again 3 times. That's the target price on SBI. TVS Motors and Zomato are the last two. TVS Motors benefiting from the two-wheeler as well as e-vehicles and PAT growth, probably EPS growth of roughly 26% CAGR is what they're expecting for the next 5 years. Zomato, given the low penetration in the industry, long runway, they're expecting PAT to jump by 20 times the current PAT. Target price 400 on Zomato, target price 5,000 on TVS.
Well, a clutch of stocks there and some interesting price targets. The ones, Hemen, that have reacted very strongly, amongst others, is Macrotech. Very strong move today. And it's a bit of an anomaly because not every other real estate stock has done well. How do the charts look here?
Currently, Niraj, we seem to be in the cusp of an intermediate correction. What we've seen today is a knee-jerk reaction because 1280 to 980 in a matter of 4 trading sessions. So if it's a 300-point fall coming in a stock like this and a positive fundamental report comes in from NFI, I think it's more of a recovery. 1140 is something which needs to be taken out if we're going to take this more seriously. I don't think that happens in a jiffy unless there is a big turnaround in the market itself.
Okay, well, point well taken. Let's take a break on that note. Mind you, for everybody who wants to understand what this Jefferies report suggests, there is a story on our website, ndtvprofit.com. You can go on there and try and hunt for that story, and it gives you all the data around what Jefferies' rationale is with each of these 11 stocks and the target prices thereof. So that's the piece that you can look as well. We take a break, come back, talk about the key volume buzzers and talk about metals, which are certainly buzzing in the session today.
Welcome back. You're tuned in to India Market Close. I'm going to switch focus. Host of stocks buzzing in trade today on the back of volumes. We have Puneet joining us with a list of those. Puneet.
Hi, thanks, Hersh. So the first stock that we're tracking on volumes is Jindal Poly Films. Now the volumes are up 24 times its 30-day average, and it is up at 14% for today. Do note that for the 9 months ended 24, the company has reported dismal results, and revenues are around 24%, and net profit is down 87% for the 9 months ended FY24. The second stock is HLE Glasscoat. Now the volumes are up 18.5 times as seen on screen, and the stock has an intraday high of 8.7%. Do know that what's working for the company is an acquisition that the company announced in September 23, where it announced an acquisition of 70% stakes in Kinam Engineering, out of which 35.5% stake has been done in phase 1, and they are working on acquiring the rest in phase 2. The company has a strong order book of 550 crores for the quarter gone by, as announced in December 2023 results. The third one we're tracking is DCM Shriram. Volumes are up 16 times its 30-day average, and the stock is up 8%. Although the company has seen degrowth over the last 4 quarters, the stock hasn't done much and is down 13% on the back of these numbers. Do note that on 14 March, which was Thursday, they announced that they have received a written order on the pending litigation for the Chatru Hydro Power Project, which was announced, and they are expecting to receive a sum of 24 crore from the government of Himachal Pradesh. Fourth one is Hindware Home. The sales for the quarter gone by has been down 2%, and consolidated profit is down 41% announced. And finally, Gabriel India. This is up on the back of the EV policy announced by the government on Friday. Do note that Gabriel is a leader in the suspension space and has an 80% market share in the high-speed scooters. They cater to all the clients such as Ola, Ather, TVS, as well as Bajaj in the EV space. They have 6 buy calls on it and 1 sell call, and average upside is roughly 30%. The stock is up 9% today and has given 140% returns in the past year.
Okay, thank you so much for that, Puneet. But let me again switch focus. We have with us Aditya Velekar, who is the senior research analyst at Axis Securities. We have a whole host of commodity stocks which are buzzing in trade. You have the likes of Tata Steel, JSW Steel, both of which are up 3+% in trade. You also have SAIL, which is up today. So to try and break this down a little bit more, we have with us Aditya. Aditya, talk to us. Of course, it's possibly a China factor. It's also probably iron ore prices cooling off. Talk to us about some of these metrics and what kind of an impact does that have on some of these stock prices?
Yeah, thanks for having me on the show. So yes, one positive news has come from China today is that their industrial production, the factory output has jumped by 7% year on year, which is the fastest rate of growth in almost 2 years. And the growth has come above an estimate of 5%. So this is a departure from the series of gloomy news coming out of China in recent weeks. So recently we have seen that in China, the steel inventory was building up, which was putting pressure on the steel prices. And at the same time, because of that, the iron ore and coking coal prices have corrected. So the overall impact of all that was reflected on Indian steel prices also. And in domestically also at India, the inventories were building up ahead of the general elections. So all these things were pointing towards weak steel prices and sentiments were slightly negative. But today, one data point which has come out of China, which is the factory output, a good growth number has been seen. But at the same time, we will take it with a pinch of salt and we will see further policy outcomes and sustained efforts of the China, whether it really translates into a stability, because although in the factory output numbers are indicating a good growth, the retail sales have gone up by 5.5%, which is in line with the expectation, but it is slightly lower than the previous month. So the consumption is not picking up as was expected. But what we are more concerned about is the property sector data, which is not yet fully reflecting recovery in that particular pain point for the country. Because what particularly we are tracking is the new construction starts, and that is something which is a leading indicator for steel production, steel demand, and that has actually plummeted to 30% and is not a very strong number. So we have to keep a tab on how those particular metrics, especially from property construction, how those pan up. And China is putting all efforts to stabilize their property and other industrial activities. So one positive news, and that is what is reflected in today's stock price movement. But a sustained recovery, it is too early a call to take. So we will have to wait and watch and see how this cycle, especially this property sector, in this.
Aditya, may I come in? So some of the things, and your points are valid, but we will only know when time comes, right? So my question therefore is, how do you play the metal stocks then? If you are fundamentally invested, let's say you are invested in these stocks, or your clients are invested here, would you take them to tail the chips off the table in this trend, or would you tell them to stay invested, and why?
Yeah, that's a very valid question. And see, the cyclicality and the news-based movement in the market will keep on coming and going. So what we look after is a structural story. So apart from China, we also have to see individually companies where they, what are their expansion plans, how they are placed with respect to those plans. So if I take an example of Tata Steel, they have an expansion plan at Kalinganagar Phase 2. So that will increase their footprint at Indian operations, which enjoys higher EBITDA per ton. So I will keep aside this noise of data which comes from China and all, and I will see where structurally the growth is happening, and based on that we take a call. So at the same time, Jindal Steel and Power, it has a non-integrated business, but due to the fall in the iron ore prices, it will have some benefit. Also, it has a good long exposure, long products exposure. So the construction activity, if it picks up after general election, then it is also going to benefit. So we have to see the structural drivers, and we have to take a position on that. Playing with the cycle, especially with the China trying to stabilize itself, will be slightly difficult at this point of time.
Okay, Shah, and therefore, what specific stocks do you like in this space? What would you recommend?
Yeah, so we prefer more of a non-ferrous stocks at this point of time, especially if you see Hindalco. It is well placed, although there is a overhang from its Novelis IPO, which they have recently announced. So we await some clarification from the management on that. Vedanta, we see a good amount of deep value because their bond restructuring they have done successfully, and they have a series of expansion projects lined up, and they have guided a good amount of growth in their EBITDA. So these two stocks. Then we have in the steel space, we prefer Tata Steel. As I said, because of their Kalinganagar Phase 2, which will kick in from FY 26-27, which will contribute to higher EBITDA per ton from their profitable Indian operations. And then their UK operations are going to stabilize and transition to more profitable growth. Currently, they are loss-making in UK, but that losses will come down over a period of 1 year or 2 years. So all these structural things, based on these factors, we will play on the metal sector.
So sorry, Aditya, one last question. Tata Steel at these valuations looks comfortable for you?
At this point, the valuations are, I will say it's at a mid-cycle level.
Sure.
We can enter at this point of time also. So the people who have already invested, they can stay invested in the stock. We still see further 10% upside from here. And as I said, as the progress happens towards UK restructuring and Kalinganagar Phase 2, it may see further consensus upside and target price upgrades in future.
Okay, thank you, Aditya, for that perspective. But of course, that entire basket of stocks absolutely buzzing. In fact, the top sectoral gainer in trade today. the Nifty metal. I also want to, bring on board Amnish Agarwal, who's the head of research at Prabhudas Leeladhar. Of course, we do have Hemen still with us. Let me first take it to Amnish. Amnish, what's the sense with regard to some of these metal counters? We saw sharp declines or sharp cuts last week. We're seeing a bit of a reversal happen at the start of this week. Of course, the China factor playing out. Your views?
Okay. Last week, including you can say all the metal stocks, the market was actually correcting. And what movement we are, you can say, witnessing now is just, you can say, some sort of bounce back, and there is no change in the medium to long term trend in that. So if there is significant movement which happens in the global metal prices, then that can result in some, you can say, extended movement. But otherwise, I would see this more as a bounce back post the reaction which we had seen last week.
So any specific names which you prefer at this point with regard to metals, Amnish?
No, I can't highlight any name at this point of time.
So not finding much value in this?
No, it's not the question of value. Like, for example, we are positive on, say, your JSPL. But again, as I said, that this I would look like, you can say, a bounce back. In the long term, JSPL is one stock which looks good to us, and even Jindal Stainless.
So I take your point. Hemen, from a chart perspective, any interesting names and any interesting levels that one needs to watch out for?
Just to digress a bit, International Copper has given a breakout above 4. I've spoken about this with probably you and Niraj a few weeks back. So I think that's we're seeing percolate that to our metal stock. Coming back to your main question, Tata Steel is in the midst of a longer term uptrend, Niraj. Hersh. So not taking a shorter term view. If I were to take a 6-month view, we are at 150. I'd see 180 coming. So I like Tata Steel. JSW Steel is another stock which looks interesting, but the top pick would be Tata Steel followed by JSW Steel. Hersh.
Sure. Point taken, Hemen. Okay. Thank you, gentlemen. Please stay with us. We'll take a quick break. On the other side, of course, we have the FNOQs as well as top buy, sell, buy today, sell tomorrow ideas as well. So stay tuned. You're watching India Market Close. Welcome back. Thanks for staying with us. Quickly trying to break down mandatorily, as we always do, the FNO cues for the day, what the data is really indicating. Agam joins in for that one.
Well, it's turned out to be a reasonably good day of trade, at least for those who are longs in the market, because of the fact that we started off with a lot of choppiness and eventually we have seen the Nifty head higher. Currently up by 0.25%, again reclaiming the 22,000 mark, and again largely on expected lines, perhaps what has been the trend of very little change in open interest. So through the course of the last 10 to 12 odd days, the open interest, the overall futures open interest doesn't usually move over the mark of 260 odd thousand and stays somewhere around 250, 260 odd thousand. Moving on to the Bank Nifty, again, well, it's flat at the moment and unwinding continues. In fact, this is where the open interest has declined over the past few days. What about the options market? Let's pull that up and see where we are seeing a lot of more traction taking place. Of course, it is around the 22,000, 22,200 levels where we are seeing a little more writing around calls. And moving on to your overall open interest distribution picture, let's pull up the levels that we are seeing most amount of activity, and that continues to be around 22,000, where we continue to see both calls and puts being written. Finally, coming down to stocks, let's have that list for you on your screen, and we are looking at longs for Balrampur Chini and something like Zydus Life. On the other hand, Coforge, Apollo Tyres, looking at shorts, and of course looking at unwinding HDFC Bank and BPCL, and short covering for Hindustan Copper, ITC and NMDC. So a mixture of trade for the broader markets, and a marginally green move for the benchmark for now.
Well, thank you for all of those observations. Let me also, pick it up with Hemen with regard to some of these real estate stocks, those ones. Now you're seeing the index, under some bit of pressure today. Most stocks also under some bit of pressure, but you're seeing Macrotech do fairly well. That's reversed, it seems. Nifty Realty is now up 0.5%. My apologies for that. But Hemen, tell us about what's your sense with regard to some of these real estate plays, and specifically with regard to Macrotech.
Hersh, if you can have a cursory glance at the Nifty Realty Index. The market's been that way. It's not standalone reality. But we virtually fallen off a cliff. Hersh, 935 was a high on 11th March, and we went to a low of 808 on 14th March. So fallen off a cliff. Decent to strong support at 820. A bounce is underway, and the bounce is going to last for a few days. I'm not saying we're out of the woods yet, but we're just seeing a recovery. Coming back to Macrotech developers, I think we've entered an intermediate correction. Why? Because we've seen a huge downward bar reversal coming in during the last week without getting too technical. The mechanical indicators have given a crossover sell after reflecting some amount of negative divergence. Having said that, we haven't broken last week's low, which should have if we were to go down further. A knee-jerk reaction on the back of Jeffrey's results report. We've seen a recovery come in as far as Macrotech is concerned. 1100, 1140 roadblocks. I would be unpleasantly surprised or pleasantly surprised if it goes above that, at least in the near term. I believe we have probably entered an intermediate correction. So it's going to take some time, and today's bounce is just a bounce, not more, unless these levels that I mentioned get over.
Take your point, Hemen. Amnish, now when I'm looking at Jeffries, they are suggesting a target price of 3,000 rupees on Macrotech, clearly indicating, and this is 5 years of course, but clearly indicating that the tailwind will continue for real estate. That's point number one. And second is, especially with regard to Macrotech, they seem to be super bullish. Your views?
Estate stocks or the companies, including Macrotech, they have been doing well. The pre-sales have been quite good for most of these stocks. So at least in the near to medium term, the outlook remains bright. But the way you can say the pre-bookings are happening, so I don't rule out a little bit of pause happening in, say, pre-booking few months down the line. So 5 years, however, is a very long call. So difficult to say. But having said that, real estate cycles are usually long, and the current cycle maybe started year and a half back. So this cycle can maybe continue for another couple of years. 5 years seems to be slightly, you can say, a very long-term kind of a call, and it's very difficult to take up view at this point of time.
Okay, so that's how Amnish looks at it. Neither of our analysts too bullish currently on macro tech. Doesn't look that way at least. But yeah, that's with regard to macro tech. You also have Poonawalla FinCorp, where Arvind Kapil of HDFC has been appointed as MD CEO for 5 years, effective June 2024. Now, with regard to some of these NBFC names, and if I can come to you, Amnish, any names in particular that are standing out? Because as the cycle reverses, those ones could again start coming back into focus. Any ones that you particularly like, and any views with regard to Poonawalla FinCorp in particular?
We are not covering Poonawalla FinCorp in particular, but having said that, my sense is that NBFCs, many of them have given very good returns over the last year and a half. And they have started trading at very fancy valuations, which are today much more than the valuation that many of these frontline private banks are trading at. So in my view, many of these NBFCs might go on a, you can say, sideways movement, and it will remain a very particularly stock-specific kind of a trade from here on. Because many of these NBFCs, for example, you look at Bajaj, it has been gradually moving down. Because when any NBFC today achieves a certain scale, then there would be, you can say, more guidelines which will be coming into play from RBI, etc. So I think, in my view, the days of NBFCs trying or getting a valuation of 4 times, 5 times, 6 times, so that doesn't seem to be a very sustainable thing for the medium to long term kind of.
All right. Again, sticking with focus on broader markets, we spoke with Aditya Suresh of Macquarie Capital earlier in the day and asked if India is still an active opportunity among other EMs. Here's what he had to say. Listen in.
India is still one of the larger emerging markets which can actually grow labor, capital, factor productivity. And this is something which you can kind of get behind as a theme over, let's say, a decade. And there's a bunch of work which we've done around this with our big book of trends. So I think the thematic backdrop and the growth kind of backdrop is clearly something which attracts investors. I mean, is this priced in? Is I guess the second part of that piece, and that's kind of where we kind of have more challenges answering that question. In particular, in that say 6 month, 12-month kind of window in the short term. So that's one side of the equation, Niraj. But then, like even when I think about as you're putting up on the chart here, which is India within emerging markets, our share continues to kind of increase. Today, we're about 18% of emerging markets, while side of China has kind of come down from 40% down to 25%. If you kind of push and ask, where do you think India's weightage could expand to over the next, say, couple of years? We're more in the camp that it further expands, even with kind of the rich kind of valuation backdrop.
Let's also listen into Saurabh Mukherjee of Marcellus talk about the current climate of, or the implications of election on markets and more.
So without getting into numbers of whether it's 400 or 390 or 410, and without getting numbers there, if the government comes through with a majority, the incumbent government comes through with a majority, but not an overwhelming one, I think there's potential for market pullback. In that market pullback, I think small caps suffer more than large caps. I think that's where part of the delusion, I think, has kicked in. So, for example, the FM couldn't be clearer in her first February vote on account, right? She couldn't be clearer. She reduced the growth rate of government spending on infrastructure capex, right? So the 21 budget, the 22 budget, and the 23 budget, government spending on infrastructure roughly grew by 30-35%. And for good reason, the government having had a blistering run in pushing up infra, railways, defense capex for 3 consecutive years. In the vote on account on 1st Feb this year, the FM restrained that number to, I think, 11-12%, right? And yet, the bulls who believe that suppliers to the government capex effort will become Nifty stocks, are still on a trip entirely of their own, and that's exactly the kind of delusional thinking that I think will get called out as we go past the elections and into the union budget post elections.
Sure. Now, with regard to elections, there's plenty of events over the next couple of months, I beg your pardon. Let me go across first to Amnish for his views. Amnish, with regard to how valuations are lining up in the markets, especially the broader markets, do you see a deeper gash before one can start buying, or do you see this as an opportunity to buy?
You see, the main event ahead of us is elections that we talked about. So my sense is that ahead of elections, market may remain volatile. That is one. Secondly, valuations are not cheap, but at the same time, we are not trading at a significant premium to, if you look at, say, last 10, 15 years kind of average. So ahead of elections, if there is a reasonable correction in the markets, I would use it more as an opportunity to accumulate good stocks.
Understood. And any specific sectors that you like at this point?
I think at this point of time, some of these private banks which have been underperformers of the last year and a half, so they continue to look good. In addition to it, I think capital goods and engineering space, it has done well, but I think on any deeper correction, this space, you can say, continues to look good to us. And in addition to it, I think the hospital stocks, they have seen a pretty good correction because of some sort of, you can say, the pricing mechanism which Supreme Court is asking the government to evolve. I think some of these are reasonably good spaces at this point of time.
Okay, point taken. Hemin, with regard to elections, your strategy, your recommendations?
Well, I am not a political person, but from whatever I have gleaned from media, I think it's a formality. I don't know how many seats it's going to be, but it's a formality. So I believe that whether it's FI or us, we want continuity in policies, stability in the government. So frankly speaking, everything looks hunky-dory. So I would look at, some of the PSUs and some of the railway stocks. There was sorry to use this term froth, it's been overused in the near term, but there was some froth in some of these stocks. I think that is gone. So I think many of these stocks look tempting to interesting. It's not going to go away. I think the Honorable Prime Minister in his speech was very crystal clear about the developments which are going to happen. So the railway theme is there. Okay, went out of hand, but I think we have a reality check which is coming. So many of the government stocks, including railways, would be something which I would really go on for. They look interesting, especially in case of a volatility, which probably will be because before the elections. Hersh.
No, Amnish, actually, come in on this one. These stocks have now consolidated for 3-4 months. Can't say long enough, even though it may seem long because their cycles are compressed. But are railways a pocket that you might look at all?
You see, railway stocks had seen a big rally. Now, there are two ways to look at it. One is, you can look at some of these railway EPC companies, whether it is IRCON, whether it is RVNL and all. But there are a lot of other companies which are going to provide a lot of equipment to these, you can say, to the railways, whether these are bearings, whether these are, you can say, rolling stock. And some of the other companies, for example, so maybe companies like, for example, whether it's their wagon companies or companies like Siemens, which are going to provide you with, you can say, locomotives for the future. I think these are, you can say, some of the segments in addition to the, you can say, traditional EPC companies, which will be in play for the longer term in railways. So I think on every decline, particularly the ones which we are covering over here is Siemens, which is a good play on the broader capex recovery as well as railway, and we remain positive on that.
Okay, Siemens is the call that Amnish is giving. And look at that stock, by the way, it's done really well for itself in the session today. So watch out for this one. Okay, now before we get in Mahima and Vinity, just mark the markets because I think there is a bit of a pullback that maybe we are seeing selectively. Are we? Yes, just, last 15 minutes, a bit of a slide lower, nothing dramatic, but the Nifty is flattening out. So much ado about nothing, but has come off. But her specific pockets are certainly correcting.
Nifty IT, Niraj, as we were just speaking, 1.5 odd percent lower. We're seeing a bit of a gash on that one. Hemin, your view, what's happening here?
Frankly speaking, Hersh, it's a bit perplexing because TCS has made a fresh all-time high today. I think it's heading or it's commenced the journey towards 4,500, not a short-term call. I'm not sure where this reversal has come from, frankly speaking. So looks a bit surprising. Could be just a one-day sell-off for index management at play, but the setup from a medium-term point of view doesn't look bad at all, Hersh.
Last week, Nifty IT was the best performing index. So if real estate was at one end, Nifty IT was at the other. And therefore, some bit of profit booking, if this is that, may not be surprising. Remember, NASDAQ didn't do that well either on Friday's session. Let's see what's happened here. But what is not doing badly, though, is Vinati Organics. And the stock is in focus for more reasons than one, not just because of the price movement, but because the Ministry of Finance has imposed anti-dumping duty on the import of para-tertiary butyl phenol for 5 years. Mahima has details on this. Mahima.
Right, Niraj. So as you rightly mentioned that the Ministry of Finance has imposed an anti-dumping duty on one of their butyl phenol products, which is para-tertiary butyl phenol. Now, just to give you an idea, the anti-dumping duty is for 5 years. Now, the impact on the company cannot be quantified at present because the company has newly entered into this particular product. However, the company has guided that they are scaling up manufacturing facilities for this particular product, and they've also commissioned 2 new plants with respect to butyl phenol, but different products. So overall, if we see, the company is scaling its operation in this particular product, and that is why the anti-dumping duty will benefit the company. However, in terms of quantification, we'll come to know in the coming quarters.
Sure, thanks for that, Mahima. Amnish, if I can come to you on this one, if you specifically track Vinati, any views on how the recovery here will be? Because when I'm looking at some of the numbers over the last 12 months or so, we kind of hit a top in FY23 and we've since tapered lower in terms of both margins as well as revenue. How should one look at this as well as the larger chemical story? What's your view on this one?
I think Vinati is one of the few stocks in chemicals where our view is not negative, because otherwise on the entire space our view is not that great because of China plus 2, the way China is ramping up the capacities and the way the prices in the global markets they have come off. So Vinati, I think, is one company where I think the stock had reacted quite steeply. Now with this anti-dumping duty coming in, I think Vinati would be, I would say, better placed than most of the other chemical companies.
But outside of that, what is causing this bullishness on Vinati in particular?
I think it is to do with, you can say, some of their initiatives like your capacity expansion, etc.
Okay. Could you elaborate on that? Try and give us some more perspective.
No, not at this point of.
Okay, fair. I take your point. Now, Hemen, your views with regard to both Vinati in particular and other chemicals, other chemical-based companies in this space? Any ones that you like in particular on charts?
Vinati has been down for 19 months in a row, Hersh. So I believe the longer-term picture has taken a hit. There is a negative overhang, and I don't think it's going to go away in a jiffy. Shorter term, yes, oversold, positive divergences, bounce is underway, and the bounce could, from 1631, we could go to 1680 and 1760. Beyond that, looks dicey. So, and we've had a phenomenal move. So we probably entered a correction of a greater degree. So nothing looks particularly very compelling as far as Vinati Organics is concerned, Hersh. In terms of chemical stocks, one gets the feeling that it doesn't look very hunky-dory at the moment, but Deepak Nitrite is something which has been corrective for the last 3.5 years, Hersh. I believe below 2000, there's very strong support. So not an immediate sort of a call, but the setup seems to suggest that the consolidation is in the last legs of its phase. So on a decline closer to 2000, taking a longer term view, Deepak Nitride is something which looks promising. Otherwise, overall, most of the chemical stocks, maybe a Nosville or maybe a Thirumalai, but otherwise it's they haven't gone anywhere at least up till now.
Sure. Thanks for that, Himin. Himin, your quick BTST, STBT ideas?
Okay. Firstly, I have a BTST on Aarti Industries at 645. Stop loss 639, target 657, risk reward ratio 1:2. 645, 639, 657. Secondly, is a BTST on Adani Port. I haven't checked the data today, but 11.5% long build up on Friday. Setup looks good. It's recovered smartly, sharply from the day's low. So a buy on Adani Ports at around 1265, stop loss of 1255, target of 1285, risk reward ratio 1:2 on Adani Ports. So Aarti Industries, Adani Port.
Sure, point taken. Amnish, if I can come to you with regard to the auto pack, plenty happening in trade today. There's also a couple of notes coming in that the impact of this new policy, EV policy, which is set to kick through, will not be on the auto manufacturers, but would rather the impact on auto manufacturers will be lower or not too much because they will largely impact the higher ticket vehicles. And in fact, this will aid auto anch plays, which is the ancillaries. Any auto ancillary plays that you particularly like, and your views with regard to this larger theme?
Okay, you see the kind of incentives which the government is providing for EV manufacturers to come in and set up shops. So that is more concerned with the luxury segment or the premium segment. But otherwise, if you look at what is happening in the broader, you can say, auto space on the EV side, whether these are, you can say, two-wheeler or PVs, last couple of months have been, I would say, relatively slow. Now, when, say, here some of the large global your EV companies, they come in and set up shop, definitely your ancillaries are going to benefit. So among them, I think there are a few, you can say, companies which are a play on that, but definitely we don't have any dedicated players which are catering purely to the EV segment. And if EV segment grows, EV is just going to, you can say, replace some of the other sales which are currently more based on your fossil fuels. So this is more like replacement of demand, and it is not that you can say these companies are totally EV dedicated, although market has been, I would say, ascribing much higher growth to these, but the way some of these stocks, they have corrected in the, I would say, the developed countries where the EV volumes have been much higher, I think I will not go buy the auto ancillary companies just because they are suppliers to the EV manufacturers.
Mm-hmm. Okay, fair call. Point well noted. There are a few who are talking about the 3 or 4 names which could do well, but Amnish saying that he's not keen to buy them just because they are EV players. By the way, something's happened in Lodha further because I think the stock is now trading at the highest point of the day. Macrotech should come up on your screen. It's now perked up and a big spike there, 12.5 or 13% higher for Macrotech. So watch out for that. Today, VMart, Shoppers Stop. So I think some of these retail plays are doing well, and media has done well today, as we said. One stock that's been befuddling is the kind of move that's come in Linde India. That stock is up 5.5% yet again, 6785 today. And look at the 1 month returns for this one. It's an oxygen manufacturing company. It's in rather oxygen supplying company, if you will. And look at that stock over the last 1 month. Essentially, the last 15 days has gained about 17-18%. Amnish, any thoughts here? It used to be well tracked at some point of time. Do you look at it fundamentally?
We don't have coverage on this, but having said that, Linde, I would say this is the company in India is into EPC as well as they are into, you can say, oxygen manufacturing, as you rightly said. Now, there is likely to be an increase in the opportunities which will be available to this company in the existing businesses. Plus, there are a lot of hopes that if the hydrogen technology in vehicles gets successful, then Linde could be one of the players who can benefit from that. In addition to it, there is some, I would say, news flows which are doing the rounds regarding the some sort of an involvement or supply to the semiconductor manufacturing industry in India. So I think these are, you can say, some of the related news flows which have been, you can say, driving Linde.
Okay, but you don't have a formal coverage, so point well taken. Okay, Amnish, we will let you go on that note. Thanks for taking the time out and being with us. Really appreciate your time and the details. Hemen, just one quick word on Linde India. That stock has had a good run recently.
Newton's law of gravity doesn't seem to apply to it. It's breaking out at all-time highs at the risk of sounding overly optimistic, Niraj. 8,000 coming.
8,000 coming. Okay. That's a short-term call, Hemen?
Medium-term call.
Medium-term. Medium-term is 3 months, maybe?
Yeah, 3 months or so.
Got it. Okay. Hemen, always good having you. Today was no different. Thanks for taking the time out.
Thank you.
All right. Let's start wrapping up the markets. 1 minute, 41 seconds left. And, IT kind of playing the spoil sport and bringing in the Nifty back to almost flatline levels. Else, not that it was dramatically higher, but 0.4% higher. So in some sense, it had some merit, but has kind of cooled off. Bring up the Nifty IT is the key culprit. Let's get the heat map up on the screen and see what's happened to some of the IT losers. UPL is the top loser, then Tata Consumer. But look at this, TCS, Infosys, Wipro, the three biggies are all correcting in the session today. LTI Mindtree is down as well. Tech Mahindra is down. I don't see HCL Tech in the list of the top 20 losers. In fact, HCL Tech might be gaining today. So that's the only one which is slightly different than the others. But everything else in the IT pack has actually corrected. No, HCL Tech 2 right here, 0.4% in the red. What's done well? Well, metal names, Tata Steel up about 5%, Mahindra & Mahindra is up about 3%, a bit of a recovery there, but Tata Steel, JSW Steel and some of the metal names are the principal ones. So autos and metals combine to give some bit of strength sectorally, but not too much for some of the others. And Hersh will come in just a moment, but just mark the market breadth very quickly. The advanced decline ratio should come up on your screen as we wrap up the markets, and they've converged and it's almost 1:1. So no big changes at the end of the day, Hersh.
Well, yes, on the broader end of the spectrum, there's also been a bit of a recovery. If we can quickly pull those up, the Nifty mid-cap and the small-cap indices, there has been a bit of a recovery. There you go, 0.25% lower now on the mid-cap as we are very close to close. Very similar on the small-cap as well. We've closed for the day around 0.25% lower on both of those. But let's pull out some specific names. Let's pull up something like a Poonawalla FinCorp last half an hour, MD CEO, Arvind Kapil, 3.7% move on that one in the last 15 to 20 odd minutes that we saw. Something like a Prestige, a KPIT under pressure. Those ones down roughly 3.5% Prestige and KPIT also. Let's pull up some on the back of news. Let's see where Vinity Organics has closed for the day. It's been up through the day, roughly 3% or so, pretty much through the day. That's where it's closed in at. Realtel, Amber Enterprises, if we can quickly pull some of those up. Also an LIC, because interesting 17% increase with regard to employee wages. But there you go, 2.24% lower. We didn't see that reaction early on in the day, but we've seen that at close. Let's pull up where a Lodha has closed up. That was in focus pretty much through the day as well. 11% is where it's closed in at. Paytm, a PB Fintech, if we can pull those up. Paytm 5%, that was expected. PB Fintech, okay, 3%. So a bit of a cool off since the start of this show. But broadly, that's where we've closed, Niraj. It's not a bad day of trade at all.
Yep, end flat, no big damage, and
Correct.
Which is great. Let's see what the week holds in store. But well, on that note, viewers, from Hersh and me and the team that has put this show together, thanks so much for tuning in.
Yeah. Same, yeah. Yeah, वैसे ही. In that order only. No problem. Well, mild gains for the benchmark and mild losses for the broader markets. That's how we've seen markets, at least today. We've managed to close above the 22,000 mark. So that's the one positive on an otherwise a bit of a choppy day of trade, as I would call it. If we can have the advanced decline, that is what will possibly indicate that choppiness. There you go. You'll see that choppiness pretty much through the day, but we've closed largely flat on the advanced decline. So that's the positive that I would take away. That there was no serious damage done across whether the broader markets as well as the benchmarks. A 0.25% down on both the mid cap as well as that's where we've settled in at the small cap end of things as well. But let's pull up on the Nifty 50 the contributories to try and see which ones were really shaping the day of trade today. You had RIL, Tata Steel leading the pack. Of course, metals, steel included, did fairly well in trade today, and we'll focus in a bit on that. IT, not the best. Even though TCS hit its all-time high, we saw a sharp withdrawal post that. HDFC Bank not doing too well either, and that's where the contributories list lasted. If we can quickly have the heat map to try and determine as to where the pain was, there you go. Look at Tata Steel, look at JSW Steel. Those are two of the top three gainers in trade today. And let's quickly look at or zoom in on the losers. You had Adani Ports, both Adani names not doing particularly well in trade. You had TCS, Infi pretty much down. UPL continues to be under pressure. And Tata Consumer. So some consumer names as well added to that list. Auto doing decently well, four-wheeler especially. Look at what M&M and Tata Motors did in trade. Bajaj Auto also not too bad. So that's the larger flavor texture of the market. Also, let's quickly take it to the BSE 500 gainers, losers, and try and make as to certain specific names which did well today. Macrotech 12% up. Jeffries positive note driving that. Linde India is on a one-way street, 7% higher. But among the losers, Coforge down roughly 6% was beaten. Tata Investments continues its lower circuit. And we also had the likes of a Relaxo, which was down roughly 4% or thereabouts. That's a wrap. Thank you.